Hey everyone, welcome to the next episode of my Monday market commentary. This is Isaiah Riel. Happy second half of 2020, happy July, happy 4th of July. Today's July 6th, 2020, it's Monday. And today I want to go over with you three things to watch for the second half of 2020. Boy, hasn't the first half of 2020 felt like it's been 4 years long? Oh man, so much has happened. Anyways, in this case, it's crazy to believe we're only halfway through this year. However, it looks to be very optimistic for the second half of 2020 for a lot of different reasons. So, hopefully for many of us, we're remaining optimistic and, hey, we'll have a positive memories, outlooks, everything in between for 2020. So in this episode, I want to go over with you three things to watch for second half of 2020. But in order to talk about those three things, we need to recap just briefly what happened the first half of 2020. And obviously, there was a lot that happened. Obviously, COVID-19 hit us very hard. The George Floyd and the protests happened. Kobe Bryant passed away. Quite a bit happened. But in this case, in this conversation, in this context, I just want to talk about COVID-19 for this part. So let's talk about it. Obviously, COVID-19 has been around for since last year. Hence, that's why it's the 19 at the end, because it came up in 2019. But it was in China and the Asian countries, let's say November, December of last year. And it slowly started making its way to other countries the beginning of this year. Yeah, we heard about it in January, briefly. We started hearing about more in February. And let's go to the end of February for a second. That's when we really started hearing about it on the news, newspapers, and it showed with the stock market. The second half of February, so let's say really that last full week, markets started panicking a little bit because of the COVID-19. Markets fell by about 10%, give or take. So that was the beginning of really the panic. What's happening? What is this COVID-19, this coronavirus? Is it going to affect us? What's going to happen? Markets responded by falling 10%. Now let's fast forward to March. Oh, good old March. That's going to be one of the most historical months probably on record for our country's history. What happened in March? Well, we went into a stay-at-home shelter-in-place, nationwide and statewide. All of us had to stop working from our offices. We had to come back home. Many people began being laid off by their jobs. On top of that, too, as well, we as a community, as a nation, really became aware of our own health, our own mortality, how much we rely on technology. That's just us. On top of that, the government, Congress, Senate, President, took them a couple tries, but they passed a stimulus bill to inject money into the system so that banks can get out monies for loans for businesses, so that everyday people can begin to receive those stimulus checks if they were available for it. A lot happened in March, and March was when the real panic happened. Give or take, roughly markets fell by another 25%. So when you add both those 2 months up, the 10% down in February and roughly 25% down in March, markets fell by about 35%. Really, give or take, in a matter of about 6 weeks. And when you spin that a different way, it happened in a matter of, again, give or take, about 30 trading days, which is just unprecedented. The steep decline of that, the rapid pace of how much that market went down, yes, for a lot of folks, it got very scary and very panicky for some people. But, of course, as Americans, as a country, what do? We respond. We get back up. We go back to work. Granted, it's at home. And the stock markets began to respond. So at the end of March, going into April, going into May, going into June, markets began their climb. Markets began their rise. If you pay attention to my podcasts and my videos, I mentioned early on that we were going to have a U-shaped recovery, like a unicorn, U-shaped recovery. I thought it was going to take some time for us to pick back up. In fact, looking at right now, it looked like I was wrong. There was a V-shaped recovery. V as in Victor. Went straight down, and now it's coming straight back up. We're not quite where we were before the coronavirus hit, but we're getting there. Markets have begun to climb. So that's the summary of what's happened, in a few minute spiel. So let's talk about the next piece here. So what are three things to watch for the second half of 2020? Number one is this, and I mentioned to it briefly to all of you. During the coronavirus, we really became aware of our own health and our own mortality, and we really got reliant on technology. We were watching Netflix. We were on our computers, our phones more. We were doing conference calls via Zoom. I did a lot of those with people. We became aware of our health, and we started really seeing how much technology is so important in our lives and also to our work life. And so the first thing I want to go over with you that to watch for the second half of 2020 is that tech and healthcare remain the clear strength leaders for investments. And so, in fact, I was on a conference call this morning, actually to also go over the second half of 2020, what to expect, and it's going more technical stuff. But interesting thing I saw was that they broke down all the different asset classes. So in a sense, the sectors and different classes. And the top five was this. Number one was internet. Number two was biotechnology. Number three was technology. Number four was U.S. government agencies. So those are the bonds and the treasury notes. And number five is healthcare. And those are the top five. And of course, there's many others, but I just want to highlight those. Because what does that tell you? Well, again, tech and healthcare are king. Internet, technology. Do you think we were buying more on Amazon? I know I was. I'm sure you were. Amazon went up. Facebook, people were more going on Facebook more often. Google, people were probably Google searching stuff a lot more on there. Zoom, if you follow Zoom. So internet tech was huge. Same with biotech and healthcare. Biotech are the people trying to find the drugs, the treatments, the cures for this coronavirus. We're not there just quite yet, but hopefully they're making some progress. Healthcare, again, we're being more aware of our own health, and so we were taking more proactive stances to make sure we keep ourselves healthy. And so that's just proof in the pudding right there, that the top five asset classes, internet, biotechnology, technology, U.S. government agencies, and healthcare, that just shows you where we stand right now with this market and also too with the sectors. Healthcare, technology are the kings, and of course, make sure you have a little bit of some safety in there, hence maybe some U.S. government bonds or notes or whatever that may be for yourself. But that's the first thing I want to share with you is tech and healthcare, keep an eye out for that. The second thing I want to share with you to watch for the second half of 2020, S&P 500 is working with a clean slate. So let me explain. S&P had a rough first half of 2020. Went up, went down, went up, went really down, started picking back up. The S&P 500 now, right now, beginning of July, is showing reemergence of strength. The S&P 500 just hit a new buy signal. Again, if you're a client of mine or if you follow my work, I follow relative strength analysis. When things hit buy signals, that is a key highlight and a key thing to pay attention to because those things don't change one day from the next. They stay like that for periods of time. So it's a very positive thing for the S&P 500. Just hit a new buy signal. On top of that, the bullish percent index for the S&P 500. Again, I've talked about this a few times in previous episodes, videos. It really shares with you the momentum of how many companies inside the S&P 500 are in buy signals. That just reversed into a positive trend on July 2nd. And again, that also doesn't change one day for the next. It takes time for those things to change, especially the bullish percent index. So the fact that now the S&P's hit a new buy signal, the bullish percent index, which is really showing momentum of the index, has now reversed into a positive trend. Those are two things that really signify that, hey, S&P is getting stronger, yes, but also too, it's poised for, hey, perhaps a positive run for the second half of 2020. So of course, no one knows. We'll wait and see. But the second thing I want to share with you to watch for 2020 is that S&P is working with a clean slate now. We're in positive momentum and we're in a buy signal. So let's see where that goes for the second half of 2020. And the last thing I want to share with you, the third thing I want to share with you to watch for the second half of 2020 is, again, continue to proceed with caution. Number one, if you're looking to invest, whether it's more money, new money, retirement money, inheritance, whatever, a liquidation when you sold a business, whatever it may be, ask yourself what your time horizon is going to be. So what's the time frame for when you want to use these monies? If it's short term, pay close attention right now. If you're long term, ask yourself, hey, are you willing to go through a little bit of bumps and bruises, perhaps, the next year or so to get higher returns 5, 10, 15, 20 plus years from now? Ask yourself that question. So I just want to pose that to you. But where I want to get to this is proceed with caution for these reasons. There's 3 major uncertainties out there right now, at least that I see. This is my own opinion. So this is what I see for the markets. Number 1, the first uncertainty. There's no treatment, there's no vaccine for the coronavirus. Again, until we have that, there's going to be uncertainty out there. We don't have a vaccine, that's for sure. And we still don't have a clear treatment where if, hey, knock on wood, if we were to get the coronavirus, we don't know the steps exactly of, hey, here's the medicines to take, here's for how long, and here's the next medicines to take after that for how long. We don't have that information just quite yet. So because we don't have a treatment or a vaccine, that is a major uncertainty, especially right now with the markets. That's the first one. The second major uncertainty is that cases are rising now. States are reopening, which is good, but again, the people have to decide what they want to do. People are going to bars, people are doing stuff. Cases are rising. And so that's going to cause some uncertainty out there. What does that mean for the future? Some people are asking, hey, are we going to have to close down again? Or are restaurants going to have to close down again? What's going to have to happen? We saw a small glimpse of that for at least here where I live in Southern California, South Orange County. Laguna Beach, Newport Beach closed down for 4th of July. Restaurants were very minimally opened. A lot of things were closed because of the fear of people going out and spreading the coronavirus. So that's the second major uncertainty. And the third major uncertainty is who's going to be president. Again, we haven't talked about that much. We will moving forward, but we don't know who's going to be president. We will in November, but we don't know what's going to be the agenda for the president for the next 4 years, whether that's Donald Trump, whether that's Joe Biden. We don't know just quite yet. So that's going to provide some uncertainty out there in the markets too as well. And so because of those 3 uncertainties, that's why I say continue to proceed with caution. And this is my opinion. I wouldn't be surprised if we see the market recover and rally from here, continue to do so. But again, this is my opinion. I think there's going to be some ups and downs. I think there's going to be some volatility because again, no treatment, no vaccine. Cases are rising. So people are going to second guess, what does that mean for the future? And we don't know who the president's going to be, at least just quite yet. We will in a few months, but not quite yet. So because of those uncertainties, that's why I say if you're looking to invest, proceed with caution or talk to your financial professional or talk to a professional, whether that's the advisor you work with. If you have questions for me, I'm here to help too as well. But nonetheless, those are the 3 things I want to share with you to watch out for the second half of 2020. My friends, listeners, clients, if you have any questions, please feel free to message me, call me, whatever it may be. I want to share that with you. I hope you have a great start to second half of 2020, and please continue to remain safe, do your part, wear a mask. We'll get through this together. I look forward to talking to you guys soon. Thanks so much. Have a great day. Take care. Bye-bye.